Hey, what's going on? Everyone wants to eventually become mortgage free, right? What would life be like for you if you didn't have to make that mortgage payment every single month? I recently made a video talking about another method to pay your home mortgage off faster using a HELOC. I explained why I didn't think this route was a very good idea, and I also told you I would make this video explaining better ways that are proven to actually work and will, in fact, pay your mortgage off faster. So, without further ado, this is that video. To understand the most effective way to pay off a home mortgage, we need to know a little bit about how they work. I think it's really important that everyone knows how a loan amortizes. I hear a lot of people saying that they think banks rip off homeowners because they front load their mortgages with all the interest. And yes, while this is true, you do pay a bulk of the interest up front. It's not because the banks are greedy and trying to take advantage of you. The real reason this happens is because at the beginning of the repayment period, you have the largest outstanding balance. The amount of interest you're being charged is directly correlated to how much money you still owe. As a quick example, it's actually really easy for you to calculate how much of your mortgage payment is going towards interest every month. All you need to know is your interest rate and your remaining balance. Let's say, for example, you have a $400,000 mortgage with a 3% interest rate. All you need to do is take the 3%, write that as a decimal, so 0.03, and divide by 12. That will tell you how much interest you'll be paying each month. And now simply take this number and multiply it by the 400,000 and you should get 1,000. The principal and interest payment for this loan should be $1,686. So you can see you'll be paying $1,000 in interest for your first month, and this will leave $686 left over that will actually be used to build equity and pay down your loan. It is kind of crazy how in the beginning of the loan, so much more of your payment is going towards interest than principal. For this reason, the best time to pay extra is at the very start. This way, you can go ahead and start making a dent in your remaining balance right away. It's just like saving and investing for retirement. The earlier you start, the better off you'll be in the long run, as this has a compounding effect for the rest of the term of the loan. This is also one of the reasons you need to stay in your house for many years without moving, because starting a new loan over again can hold you back financially. In fact, let's look at this another way. The impact of making extra payments will only be reduced over time. Towards the end of your loan, normal payments will be made up primarily of principal and much less interest. So if you're really focused on paying extra early on, I would even say you could cut back on this later down the road. A good goal might be to take a look at your amortization schedule, like the one we just used for the example above, and make sure you're paying enough extra each month so that you have more going towards the principal than you do interest. So at the beginning of this example mortgage, you would want to pay an extra $315 on the first payment. This will cause your remaining balance to go down much faster, and over the long run, this will save you a lot of time and money. Let's look at a couple of other ways you could pay extra towards your mortgage. The first one I would investigate is refinancing. Could you simply get better borrowing terms than you have right now? Refinancing can be a complex topic in and of itself, so I'll likely end up dedicating a video to just that in the future. But here are a few quick things to consider. First, before you refinance, make sure you're going to stay in the home for a minimum of 3 to 5 more years. This is going to help you recoup the cost of refinancing, if any, over time. One thing to be cautious of is refinancing back into a new 30-year loan. If you've already been living in the house for a while and you've already paid down your balance quite a bit, refinancing back into a new 30-year loan could substantially lower your monthly mortgage payment. The temptation here, of course, is to only pay your new minimum payment, but this will only cause you to go backwards. You can certainly do this from a risk management standpoint, as your lower payment will be much more affordable should you lose part of your income, want to change careers, or if you experience some sort of health issue along the way. But if you go this route, you'll want to make sure you continue paying the same amount as you always did before. Additionally, I don't recommend refinancing if your only reason is to switch from a 30-year to a 15-year. This isn't necessary and could be expensive. You can just run the numbers and make payments the same way you would if it were a 15-year, and it will all work out the same in the end. For our prior example, this means you would need to start paying $27.62 per month right away, and you would knock this loan out in half the time. Another really common approach you may have heard of is to pay your mortgage biweekly. This means you're going to be making half of the payment twice per month instead of the full payment only once per month. The first thing you might think is this helps you pay your mortgage down faster because you'll be saving money on interest by making payments in the middle of the period, but this is not the case. A home equity line of credit accrues interest on a daily basis, and in that situation, this would help you. But a typical mortgage only accrues interest on a monthly basis, so it doesn't actually matter which day of the month you pay your mortgage on as long as you're not late or anything. I asked my mortgage lender if I could do this, and they said yes, we do accept biweekly payments, except they also told me that they actually just hold on to the first payment and wait until they collect the second payment and put them together and then credit your account. So in the end, this really doesn't accomplish much. What this does accomplish, however, is it causes you to make a full extra mortgage payment each year. That's because there are 52 weeks in the year, and by making a payment every 2 weeks, you'll end up with a total of 13 payments instead of only 12. This can be a good strategy because it keeps things automated and consistent throughout the year and doesn't take much effort to monitor the process. Think about this for a minute. There are several months out there with 5 Fridays in them. What are you doing with these extra paychecks during these months? Whenever you find yourself with some extra money, it could be wise to simply make some extra principal payments. Make sure your bank knows you want this money to go straight to the principal, otherwise they might just try to apply it to the next month's payment. So really, the fastest way to get rid of your mortgage is by paying as much as you can, as early as you can. This can be done through one of the techniques that we discussed, like making one extra payment per year, just by making random principal payments whenever you have the extra cash, or something more structured, like paying the same amount extra each month. All of these will help you pay off your mortgage faster. As a bonus tip, I'm a big believer in buying less house than you actually qualify for. On the upper end, banks will actually lend you an amount of money that I think is slightly unreasonable for you to have to pay back while also trying to stay inside of your budget. You don't want to end up house poor. Make sure you leave yourself enough wiggle room that you can afford to pay more than just the minimum towards your mortgage each month. At the end of the day, who wants to spend the next 30 years and most of your adult working life just paying off your mortgage? Not me. And this, of course, is assuming that you stay in the same house your entire life and never move. I hope y'all can utilize some of these ideas for yourself and get that mortgage paid off faster. Let me know which technique y'all plan on using in the comment section below. Give this video a thumbs up if you got value from the content. Please consider subscribing if you haven't already. And thanks for tuning in. We'll see you in the next one.